State Bank of India in a report says that withdrawal of 2,000 rupee notes from circulation was in fact beneficial to country's banking system. How is that, Karthik?
So Shweta, I'm pretty glad to read that report because it ratifies practically everything that you, Rakesh, and I discussed in our other bigger studio. The moment demonetization, so-called demonetization or withdrawal of 2,000 rupee notes happened, and it's alluding to all of that. So basically the report suggests that about 3.3 trillion rupees worth of deposits have shored up with Indian banks.
Okay.
So this is a case of reliquidation of banks. So this is claim number one that we had made on the evening when this order was released by RBI. So 3.3 trillion rupees is big money, which has recapitalized the books of saving bank accounts, right? About 81% of this has gone to term deposits, right? Now, term deposits, unlike the saving accounts, offer better interest rates to customers. But the report also suggests that as much as 30% of these deposits could actually be used to repay existing loans. So clients who have taken loans from banks have now put 2,000 rupee notes back into the bank account, converted that into a term deposit. About 3 out of every 10 people who have made these term deposits will use this corpus to repay their loans, reducing risk of NPA, reducing risk of any other misdoing in the books of the banks. So those fears get removed. The third interesting point, which again we had referred to, was that are we withdrawing these large currency notes to give a fillip to the e-rupee, the central bank digital currency? And that is the third point which the RAP report by SBI mentions, that this move could in fact give a good shot in the arm to the central bank digital currencies, basically making currencies paperless and really moving towards a cashless India going forward. And then with this overall reliquidation of banks, there is enough money available with banks to be able to increase the credit offtake for corporate India. So now that you're flushed with funds, you don't have to go borrowing more money from RBI at the prevailing high interest rates. Remember, we are in a high interest rate regime. So banks don't need to go and borrow money from the RBI at a high repo rate. Rather, it can utilize the existing corpus of 3.3 trillion rupees available right now to lend to industry. And industry will then be able to offtake this credit and redeploy it in other growth engines of the economy. And this comes on the back of the CDR, the credit deposit ratio of banks, now for the first time in the last 3 years reaching the pre-COVID levels. So overall, I think all the hypotheses that we had made in the studio on the evening of the 2,000 rupee note withdrawal gets ratified in this SBI report.
I have two questions for you. Number one, for the consumers who are watching out there, does this mean that there could be I understand it would not be immediate, but could loans get cheaper since banks have more money now?
So banks will have the discretion to give a discount on loans of a large ticket size. If you want to go and buy a car or take a home loan for, let's say, 50 lakh rupees or so, it is unlikely that the bank is going to make a concession to you. But if a corporate entity was to approach a bank and negotiate an interest rate with this availability of excess funds in the bank, I think the corporation will be able to negotiate a better interest rate without the bank losing much, because it is only redeploying this money back for economic growth and getting an interest rate, as opposed to going back to RBI and borrowing more currency at a prevailing high interest rate. So I think individuals seeking personal loans, car loans, home loans will not expect a rate cut, an official rate cut in banks. But corporate India or a government institution wanting to borrow a large sum of money will be able to negotiate a better rate.
So that could be possible. Question number two. you know, the idea behind 2000 rupee note withdrawal was largely a lot of people will come back and exchange it for a cleaner note, literally cleaner note. But with banks now being flushed with cash, are we to believe that more and more people deposited that money as opposed to exchanging that money?
That's right. That's right. That is what seems to be the case, that that a lot more number of people actually reflushed their accounts with money rather than exchange a 2000 rupee note for 500 rupee notes.
Okay.
So that 2000 rupee notes went back to their accounts, and then overall, of course, you know, so many people making the same transaction led to the swelling up of liquidity in banks.
Okay, so all in all, right now it looks like it's been good news. This latest report by SBI points to how withdrawal of 2000 rupee notes augurs well for the banking sector.